My company is a company called Nanosonics. It didn't actually come out with its results. That's, I think, next week, but it actually came out with a trading update and also came up with an operational update, which sent the shares down 16% on the day. So for those that don't know, Nanosonics trades in the ASX under the ticker symbol NAN, or not another number. If you're a developer, that's what you'll remember. Nanosonics does something that looks like a microwave. So it goes in a hospital and it disinfects ultrasound probes. So a radiographer would put the ultrasound into this microwave looking thing. It would disinfect it with some chemicals, and out pops a sparkling clean ultrasound probe that can then be used on the next person who might be awaiting surgery. So Nanosonics makes money in two ways. It sells the machines, but it also sells the consumables, like the bits and pieces that go along with testing and maintenance, and also kind of what they call consumables, which are, it can be like the liquids and all these types of stuff. And so what's really interesting about this is that the company is it's massive in North America. So as of the first half of 2021, the business had 22,120 units. These are called Trophon units, these microwave type things, installed in North America. The next closest was the Asia Pacific region at 1,600 units. Now, what's really interesting is the way that this business had sold its devices was through GE Healthcare. And GE Healthcare had been on this long-term kind of distribution / reseller agreement with Nanosonics. And the most recent agreement that Nanosonics made with GE Healthcare was in 2017, which then came into effect in 2019 and was supposed to go until later this year, so as in 2022. However, what happened was it was released this week it was kind of put out to the market this week that deal had been pretty much severed a few months short of actually ending. And what was going to happen is GE would become more like a pass-through reseller. So Nanosonics would now have to take care of all of like the end sales and meeting with customers in hospitals, installing the units, training people, all that sort of stuff, whereas GE would do that in the past. And so this is a massive deal because GE made up so much of the sales and the distribution effort. Obviously, for an Australian company trying to sell into the US, it's a massive market. But the short of it is now Nanosonics and GE are in talks to formalize another agreement, which might come into place from July 2022, but it's not going to be the same. Nanosonics talked about earning more revenue from this new deal because they will be selling direct, but also they'll be paying more out for sales staff. It's estimated that they'll have about 100 staff on the ground by the end of the agreement in North America, and the new sales will start flowing through in 2023. So the impact of this is between 13 and $16 million to revenue. So that's what they potentially forego. But they will have the direct operations staff ready to go by the end of Q4 2022. It will result in higher gross profit margins because they'll be earning all of the revenue or most of it themselves from hospitals. Whereas under the old agreement, GE would take a clip but the difference is it might have a higher gross margin, but the operating margin may be lower because they'll be incurring sales team expenses, general and admin, travel, that type of stuff. The thing, I guess, that was hidden by this negative update was actually something that I'll just pull out here at the end, which is that the company expects to report revenue of $60.6 million in the first half of FY22. That will be up 41% year over year. So it's still experiencing pretty massive growth. And this is important to note because the company makes the majority of its money from consumables revenue, not from actually selling the unit, which is what GE did for Nanosonics. It's actually been a few years, since 2019, that Nanosonics has been doing all of the consumables themselves. So the business actually makes more money that way anyway. So it's not doom and gloom for Nanosonics. It's just a transition period. I think if I could draw out one final thing before I throw it back to you, is the company is facing a stiff competitor by the name of Germatech, which has this thing called Kronos. It's a new device which hasn't received all of the approvals yet, but it is a competitor to the Trophon unit by Nanosonics. Nanosonics, by the way, is also moving into endoscopy, which is another growth lever for the business from 2023 onwards. So that's an update that sent Nanosonics, one of the market darlings, down 16% in one day. I think the update was good in terms of like management were transparent. They were honest about the risks. It's not a great thing to lose a major supplier, but it does actually de-risk the business from having a concentration risk if they can pull off the direct sales channel. So overall, not a very good update for those existing shareholders, but I'll give it a B. It's kind of arbitrary, but I'll give it a B because it's not bad. It's not terrible, but it's not the best thing that people were expecting when they woke up to a 16% fall. Nanosonics, I think it went over time.
I have a question for you. I know,
yes.
This is a speculation. Why don't you think Nanosonic isn't acquired, or do you think that? Because it makes sense if it's like a company like Stryker or someone that sells medical devices and has those relationships with hospitals and therefore has the foot across the door. If they acquire it, they can actually, for very little delta, grow this business. And is the share price fall enough for someone to lob a bid?
Well, that's the thing. It's $1.4 billion company still, and it's I'm just going off Google Finance because I don't have the numbers here in front of me. PE ratio says 168. That could be depressed because of COVID. So maybe it's something to do with simply the valuation of the business. But right. I tend to agree with you that the business itself is actually a really interesting business in the sense that it kind of does its own R&D. It brings out its own products, even if they do take a little bit longer than expected. It's got a really solid market presence in North America. It's got opportunities throughout the world. It does make a lot of sense to be an acquisition target. And it's, I know you've followed it for a long time. The business itself is actually a business that has, it's been around for a while and has been growing pretty steadily. Someone like that could have bought it 3 or 4 years ago for a lot less than they bought it today. So who knows, maybe we're having that same conversation in 5 years, but yeah, the only thing I can think of is valuation.